Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 3rd December 2020. In the international market, US Treasury yields are rising as lawmakers seek to find a clear path towards a new fiscal stimulus. The UK became the first Western country to approve a COVID-19 vaccine, with its regulator clearing Pfizer-BioNTech's shot ahead of decisions in the US and European Union. With increasing hopes on vaccine and likely fiscal stimulus soon, US 10-year closed 3 basis points up at 0.95 percentage points and 30-year bonds closed 4 basis points up at 1.70 percentage points. As you know, we at Knight Research have been vocal supporter of steepened yield curve and higher 10-year bond yields. We expect US 10-year to cross 1% soon and consolidate around 125 for medium term. In the crude oil market, OPEC Plus meeting will be resuming today, and we are expecting the major nations to come to some consensus on oil production cut trajectory in 2021. The most probable outcome looks like 3 months of no production cut extension and then gradually relaxing the oil cuts. Crude is trading at $48 per barrel. Crude's short-term range seems to be at $47 to $49 per barrel. In the currency market, DXY or dollar index is at 91.02. DXY's today's range seems to be at 90.88 and 91.48. US FDA's decision on vaccine approval will come on 10th December, and we expect DXY to reach 88 levels by then if the selling pressure continues. USD CNY or Chinese yuan is at 656. USD INR with a low of 73.40 closed at 73.79 on Wednesday. RBI's intervention was seen at 73.50 levels. USD INR's range for today seems to be at 73.55 to 73.85. Remember, we just spoke yesterday that USD INR will be heading towards 73.50 and then RBI intervention will come. The events unfolded exactly in the same sequence. Watch out for any profit booking sell-off, if at all, that comes in Indian equities by FIIs in the next 10 days, as that event will take rupee back to 74.50 levels. In the domestic market, 577 GS 2030 closed at 592 versus 593 on Wednesday. MPC meeting has already started yesterday. Here is our expectation from the MPC meeting. Number 1, policy guidance. We expect RBI to continue accommodative stance. Reiterate lower rates for longer. Number 2, inflation guidance. RBI will continue their inflation guidance, expecting the CPI numbers to fall in January to March within their comfort level of 2 to 6%. Number 3, abundant liquidity issue. Now, this is a tricky one. After RBI cut the CRR to 3%, 1.37 lakh crore was unleashed in the system, which was the need of an hour. But then, this excess liquidity has been creating a lot of issues, taking T-bill rates lower than the reverse repo rates. Main reasons: number 1, lack of large borrowers from the call money market. Number 2, liquidity accretion because of RBI's intervention in the foreign exchange market. And number 3, heavy cash flows received by mutual funds from corporate entities. Please note that mutual funds are not permitted to access the reverse repo window. Hence, they deploy hefty amounts of cash in ultra short-term securities such as T-bills and ultra short-term commercial papers, further dragging down money market rates. Therefore, FIMDA committee has suggested RBI to allow mutual funds to access reverse repo window. This will ensure that the T-bills and commercial paper rates do not fall below reverse repo. FIMDA committee has also suggested the reintroduction of Market Stabilization Scheme (MSS), which was deployed in demonetization era as well, to suck the excess liquidity. Market participants are keenly awaiting RBI commentary tomorrow, and until then, we do not expect any major market movements. If the commentary is not favorable for bond yields, the next support for 577 GS 2030 is at 598. Do not take any major positions before the MPC meeting conclusion. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.